Good morning. I am so excited to be here with you all on this virtual conference and very much looking forward to the time when we can all gather again in person. Today I am here to speak with you about accounting for water utilities, also called bookkeeping. You know, accounting and both bookkeeping terms are used interchangeably, but we're going to talk about some of the differences between the two. But first, let me find out who I'm speaking to. So if you are a person that works in a utility and you do either bookkeeping or accounting tasks, go ahead and put that in the chat box so we can know who we have in the audience today. As well as, I'd like to know what type of utility you are. Are you a water supply corporation? If so, please enter WSC in the chat box. If you are a municipal utility district, then enter MUD. If you are a special utility district, please enter SUD. And then if you are an investor-owned utility, just enter IOU. Thank you so much for your cooperation. You know, the people that work in the bookkeeping and or accounting industry for their various utilities are some of the most important people in the utility. Because of the role you play and the work you do, you help senior management and board directors, elected officials make informed, intelligent decisions as they try to obtain and reach the goal of obtaining financial sustainability. And you do that through your proper recording and your proper reporting through financial statements to those individuals, board directors, and senior management. So thank you so much for all you do for our industry. Let's talk about some of the common duties. So first one, of course, is responsibility. Elected officials, staff, operators, accounting staff, bookkeeping staff, we all are responsible to the community we serve and to the organization we work for. And so responsibility refers to the obligation that we have to act in a way that's going to be responsible. Accountability is very, very close to it. Actually, when you look up in the definition, those two words are used interchangeably when they define each other. But accountability has to be, again, relating to reporting on our actions and non-actions, being accountable to the people we serve. So if you're a bookkeeper on the staff, then you serve the elected officials, you serve your supervisor, you serve your staff and all those people in the office around you. Elected officials serve their constituents, the people that elected them and put them in that position. And then one of the most important duties we have is fiduciary, and that means trust. So all three of those are very, very important words: responsibility, accountability, and fiduciary. All the people who elected us or put us into those positions are trusting us to make decisions that are in their best interest. Definition of accounting. So it is a measurement, processing, and reporting of financial and non-financial information about the economic entities such as businesses, corporations. Accounting has also been known as the language of business. So again, here's an item for the check box. If you are a business, put into the check box yes. If you're not a business, put in the check box no. Great job. I see that some of y'all are putting yes, some of y'all are putting no. Now here's a definition of a business. If you receive receipts or revenue, money, and you also expense or write checks and have payouts, then you are a business, whether it is a nonprofit or a for-profit business. So in fact, all of us are business. Even our individual households are actually businesses by that definition. And the definition of bookkeeping is the recording of financial transactions. So you see the major difference: bookkeeping is recording, accounting is reporting in general terms. So that bookkeeping is very important because that's where the recording is done. We've heard the term junk in, junk out. So it's very, very important that the accuracy, quality of the process in bookkeeping be very, very high level of excellence. Software, of course, is very helpful. Hopefully, everyone in this audience is no longer using the calculator and receipts in the shoebox for their bookkeeping. There's numerous, QuickBooks is one of the ones that's out there. There's numerous other software. Just make sure you're using some sort of software to help you. If your utility don't have one, reach out to me and we'll make sure you get one. Let's talk about some basic principles of bookkeeping or accounting. So the revenue principle, and this is a document that we will share with you and will be provided to you that gives you a lot more detailed information on each one of these principles, so you'll be able to read it and review it and apply it as necessary. The revenue principle speaks to the practice of recording revenue when it's received into the bookkeeping. So and that does not mean that you always have the funds in-house yet. A lot of it depends also on what type of accounting process you have set up. Two major types. One is the accrual process and one is the cash. So if you think you're using the accrual, please put into the chat box the accrual process or just accrual. If you're thinking using the cash needs method or the cash method, then just put in cash. The difference is that the accrual method records the activity when it occurs, when the invoice is received, when the check is sent out. It's treated as if the cash has been received. And the cash method is just like it says. It only records it exactly when the cash is received. So when we send an invoice out, it's not recorded yet until the actual cash is in the bank, it's cleared the bank, and now it's an actual cash expense. Same thing, cash receipt. Same thing on the expense side. When you write a check and it clears the bank, now it's an actual expense. Most entities these days use the accrual method because that's the preferred method by the IRS. Same thing on the expense principle. You record it when the activity occurs. And then the matching principle is very close to those two, is that you want to try and match every revenue line item to an actual expense. And that'll show up later in your financial statements. The cost principle. That principle speaks to recording every cost that you have based on what it actually costs the utility. Not the book value, not the market value. So for example, the utility purchased some land and it cost $10,000. But then that land appreciated over time and now it's $15,000. In the books, you want to record it as $10,000, the actual cost. In a like manner, you may purchase a truck for $15,000 and it depreciated and now the value of it is $5,000. Again, you want to put down what you actually cost. Very important bookkeeping principle there. And number 5 is probably the most important, the objectivity principle. This speaks to recording into the records, recording to the bookkeeping software, the system, only verifiable, accurate information, no subjectivity at all. No saying, I think it was this much, but you look at the receipt, some sort of source document. Could be a receipt, could be an invoice, could be a canceled check, some sort of third-party verifiable document that makes sure that all the information is based on objectivity only. Now let's talk about the basic steps that are involved with bookkeeping or accounting. Number 1, prepare the source documents. So as you sit down to begin entering the data into the software, you want to make sure that your source documents, again, those receipts, canceled checks, invoices, any kind of document that's relatable to a specific revenue item or a specific expense item. Make sure those items are organized and prepared to be entered into the software. And then as you enter the items into the software, keep in mind what are the financial effects of it. And so sometimes what happens, and everyone being human, this is understandable, but sometimes revenue items get entered as expense items. And sometimes people make the mistake of entering expense items as revenue items. So as you're entering, you're keeping in mind what is the financial effect of this transaction. Make original entries in journals and accounts. The journal part of it is pretty much taken care of these days. You know, back in the old days, we used to have these actual books. They were called journals. You would do manual entering. Now with the accounting software, bookkeeping software, that part of it you don't have to worry about. But the accounts are very important. Your chart of accounts. When you actually set up your bookkeeping software, you have to select the proper chart of accounts. So the chart of accounts for a water utility would be totally different than the chart of accounts for an automobile supplier or a bakery or a hair care salon. So you have to make sure you select the right chart of accounts or customize the chart of accounts for your particular utility. And then you have the next step is performing the end of period procedures. So there'll be some procedures for the end of the month, end of the quarter, and end of the year typically. And those will typically relate to verifying information, conducting trial balances, as well as producing reports. And number 5, you're going to conduct your trial balance. If there's an error in entry somewhere, it's normally going to show up in the trial balance. If you have the luxury of having a second person work with you in the bookkeeping and accounting staff, you want to have 2 different people do the trial balance. A person different than the person that did the entering. They're more likely to catch an error. If you don't have that luxury, just take some time away from it. Maybe take a day or 2 away from it and then do your trial balance so it's a kind of cold type of approach on you. And then you have to, of course, close the books for the fiscal year. Again, your accounting software is very, very useful here. It makes that somewhat a lot easier than what it used to be. But that's very important because those are the documents that closing books process is what the auditor is going to use to do the annual audit. Some more basics. So the elected officials, the board of directors, senior management are responsible, there's that word again, responsibility, for adopting policies. That's their role. That's their primary role, is to adopt policies so that you as an employee know exactly what you are expected to do. Those accounting policies could be things like, when do we close out the books? What type of documentation is appropriate and what we will use for no handwritten receipts, for example. You want to have third-party receipts. So all of those accounting policies will be adopted by the board. Of course, if your organization needs help with that, Texas Rural Water Association has great information on that. You can reach out to them to get a full set of good best practices accounting policies. The chart of accounts I alluded to earlier, NARU stands for the National Association of Regulated Utilities. In Texas, we have the Texas Public Utility Commission. So all of your states have a utility commission, and their association is NARU, National Association of Regulated Utility. What's important about them is that they adopt standards that apply to the nation, and they have a chart of accounts that they have adopted as a national standard, and Texas has adopted as a Texas standard. So you want to review those chart of accounts to make sure your accounts match the state's approved chart of accounts. If you don't have those chart of accounts, you can go to the Texas PUC website and download their rate application or their annual report, and they have those NARU accounts already in there. Another very important document, financial statement that the board and senior management would need is your balance sheet. That could also be a policy. How often do you want to produce a balance sheet? Do you want to produce it weekly, monthly, quarterly? For most utilities, I recommend monthly balance sheet. Some of the very, very small ones can get away with quarterly. Some of the very larger ones might need to do it every day or at least every week. But the balance sheet is what tells the utility is a snapshot in time. What is my financial picture at the moment the report is ran? What are my assets? What are my liabilities? And what is my net worth? And so those are very, very important items. And then within the balance sheet, you have them broken down from your current assets, which is cash or cash-like assets. And then you have long-term assets like the building or the land or the truck, those types of things. Similarly, on the liability side, you have current liabilities, Those are bills or payables that are due in less than 12 months. If it goes beyond 12 months, like a long-term loan from the Texas Water Development Board, USDA, truck loan, something of that nature, now it's a long-term liability. So you want to make sure those balance sheets are broken down at a minimum in those 4 categories. And a very similar, most important document is your statement of activities, also known as the statement of revenues and income, also known as a profit and loss statement. This particular item actually reports on a time period, typically a month, sometimes a quarterly, and then annually as well, to show how much revenue you received, what your expenses were, and what is the difference. Of course, in the nonprofit world, we call it excess revenues over expenses. In the everyday world, it's the profit, the difference between revenue and expenses. Both of those very important documents only would be accurate to the degree that the information entered is accurate. So again, people will be making decisions based on these documents. So you want to make sure that the excellence level in terms of entering the document is accurate, checked, verified, and correct. And then you have your budget. Best management practice is that the board of directors, elected officials, would adopt an annual budget. And the bookkeeper's responsibility is to do at least a monthly report, if not more often, that compares the actual expenses to the budget expenses. So it's a line by line item comparison, both on the revenue side and the expense side, comparing each month. And then some people take it the next step, compare year to date and month to month, which I recommend. Compare month to month and then also have a year to date comparison. Again, so that the elected officials, senior management will have a tool to look at to see how are we doing. Do we need to adjust the budget? Do we need to adjust the budget on a particular line item? As a good example is that right now, because of COVID-19, a lot of utilities are experiencing a revenue shortfall to the budget. And so you want to be able to be aware of that if you need to make an adjustment. Another one is your debt. You want to include in your bookkeeping, your reporting, accounting, is a statement of debt. Shows how much debt you owe, who is owed to, what's the annual payment, and so forth. And then the most important one I like to talk about is the reserves, a report that details out, it may be part of your balance sheet. What are your reserves? If you have debt, you have to have a debt service reserve. Typically, you want it anywhere from $1.50 to $2 for every dollar of debt you have. Most financial institutions, lenders will require a minimum of $1.25. Same thing in your operating reserve. Most accountants require, or suggest rather, $1 for every dollar of expense that they have in a reserve or what we call savings account, same thing as a reserve. I prefer $2. Again, COVID-19 is a great example of it. So if you had $2 in operating in your reserve for every dollar of annual expenses and you had a shortfall in your revenue, you simply go to your reserve account, take care of the shortfall to get you through the temporary situation until your revenues start coming back in. But you want to be reporting on those reserve amounts, where they're invested at, what type of interest rate are you getting on them, when did those CDs renew. All that is in your reserve reporting and statements. Other records, your fund balance. What do you have in your various funds? Depending on what type of utility you are, in terms of WSC, SUD, and MUD, some of you are able to collect taxes, property taxes. What is the fund's balance on that? It's a separate fund, when I say fund, I mean account, separate actual account. You have operating fund, you have debt service fund. Some utilities have a capital improvement fund. So each one of those are separate pots of money, separate bank accounts. They have to be reported on at least on a monthly basis, showing the balance that you ended with on the previous month, what was the transaction in between the month, cash received, interest received, any disbursements, and then the current balance. That should be done on a monthly basis. Same thing with your expenditures. This goes into a little bit more detail than just the expense on the profit and loss. Now you're looking at every expense line item, but actually each individual invoice. Who was the expense sent to? What was the amount, and what was the reason for it? That gets into a little bit more granular, a little bit more detail. Typically looked at most of the time by senior management, sometimes board of directors. What are your investments? Do you have CDs? Do you have money in pool accounts? Where are you investing the money? Now, of course, in Texas, we have something called the Public Funds Investment Act, and that governs where we can invest public funds. And so you want to make sure you're following that, but each entity is required to adopt their own policy for investment in compliance with the Public Funds Investment Act. If you need assistance with that, again, reach out to Texas Rural Water Association. They have lots of information on that already discovered and available. Taxes, again, some of you levy taxes. SUD, WSCs, and IUs, of course, are not allowed to levy taxes. If you're a MUD district, you may have taxes for both maintenance tax as well as debt service tax. And then you need to have a report on your directors. Who are they? What are their terms? When are they up for re-election? And so forth. Same thing with key personnel and your consultants. A lot of times you'll see this report as well in your audit. So you can refer to your audit. Many times your auditors will already have done this report for you on at least an annual basis. Now let's talk about making sense. So basically what we have so far is taking a lot of data, enter into a software, and that software is now generating various reports, normally in some sort of linear financial statement. And a lot of people are not very keen on actually reading those financial statements. So now you want to try and figure out a way to be able to analyze the statement to say, are we doing good, bad, or indifferent? So here are some of the ratios, common ratios. Debt service ratio. So you want to take your annual fund balance. And this fund balance is only the fund that is designated or set aside, earmarked, only for paying debt. And you take that fund balance, the amount that's in the account, you divide it by the annual service that you have to pay in debt, how much you got to pay every year. Not the total outstanding debt, just the annual amount. And that's going to give you a ratio. Like I said earlier, you want it to be at least 1.25, $1.25 for every dollar of debt, or better yet, the best practice, $2. So you're well covered. Same thing, your operating fund. The fund balance, how much is in your fund balance, not the operating account, but the fund balance, the reserve or savings account, divided by your total amount of annual expenses for the year, and that's going to give you a ratio. 2 is great, 3 is better, 1 would be the minimum. Current ratio, also known as the asset test in business, is your current assets divided by current liabilities. And then you have your water accountability ratio. On this one, most districts, water utilities do this already as a part of TCQ requirements. They take the water pump minus the water they sold to customers, and that difference is a accountability ratio. What we recommend you do is convert that ratio to dollars, and we'll show you how to do that in a second, so it's more meaningful. You know, a lot of people relate to pictures more than they do text or, charts and graphs. So what we're going to do is talk about some ways to better present the information to help both the board directors and members of the public understand what you're trying to communicate to them with all these numbers. So for example, here's one called the debt service ratio. We talked about that earlier. Here is a picture form of a debt, and on the left-hand side in the green box, you can see it'll have a little description of what this particular box covers. And there's actually 2 tables here. The top table is a 5-year history. So the purpose of that is to always be looking at trends. How is my utility doing? Are we going up, down, better, or worse? So you can see this is from 2014 on the left-hand side, and then it goes from left to right to 2018, with the last section in the dark blue section showing how do we end that year. So in this case, we have $980,000 in our debt service fund. That's money in the bank, in the savings account, in our industry known as the reserve account. And we have annual expenses of debt service of $401,000. So it's a simple division from there, the 980 divided by the 401. That gives us 244%, or a better way to say it, or another way to say it, is $2.44 in the bank for every dollar of debt. So if a financial institution like Texas Water Development Board, any kind of bank, were looking at our utility and thinking about loaning us money, they'll say, let's loan them money. These people can show they have a history, a trend of managing their debt very well, and we have no risk. If something happens, they don't get revenue, they still got money in the bank to make the payment. So we're good to go, little or no risk, which also means a lower interest rate. The bottom table talks about how do we compare. In the industry, you might hear the word benchmarking. So we have went out and selected various utility districts in our area, geographical area, that are similar in size and scope and operation to our district to compare ourselves to. So you can see we have 244%. One of our sister districts has 310%. The other district, NA, does not have any debt, so it doesn't apply. And then we have another district with 86%. So if I was advising that district, I said, you guys need to build your debt service fund up. That's very risky. And then you have another district with 257%. So that's another way to present your debt service ratio to make it easy for people to comprehend. Easier. And then the same way on the operating fund, same format. On the left-hand side is a description, information about what we're looking at. And again, the top chart starts with the 5-year history, 2014 on the left side, going to the right for 2018. And for 2018, we had a little over $4 million in that savings account, that reserve account of our operating fund. This is just operating, and our annual expenses was about $1.4 million a year. So again, simple division, the $4 million divided by the 1.4, and we have 33.5 months, or a little over 3 years worth of operating expenses in the bank. So that means we could operate the district for a little over 3 years without receiving any revenue. So if a worst case scenario happened, and this actually happened in a district near Galveston when Hurricane Ike came through. We had 3 years, a little over 3 years worth of reserve. Hurricane Ike came in and wiped out a lot of the above ground development, which this district operated on tax revenues. So now that tax revenue is gone, but they was able to continue to operate the water system until those properties were rebuilt because they had the reserve account. That's the purpose of the reserve account, preparing for the worst case scenario financially. Bottom is the same format. We take those same districts that we compared ourselves to earlier, and we see we have 33.5, another district has 24.7, another one is 35.8, 26.9, and then the last one on the right, 22.2. So every one of those, I would say, are in good shape as far as their operating reserve and operating fund ratio. This is a way you can actually depict or show your revenue. So again, you normally on your income statement, you're going to have just a list of line items, account names, and the amount of money. This kind of puts it in a more user-friendly, customer-friendly, board-friendly pictures for them to relate to. And again, you have your trend. We're always going to be promoting that 5-year, at least 5-year trend, so we can see how are we doing, good, better, or worse, or how things stand the same or changing. So just at a glance, you can see that large orange one, which is a little bit over 50% of the revenue. That's our property tax revenue. Of course, you may not have property tax revenue, but whatever your revenue streams are, it will be depicted into this pie chart. So again, it's just a quick and easy way for somebody to see, okay, where does our major revenue come from? So in our case, you can see it's the property tax revenue and then the water and wastewater revenue services. The same thing now, but it's now we're talking about expense versus revenue. So on the left-hand side, you have the quick description, and then you have your pie charts the 5 years, with the current year always being on the right-hand side and the largest one. And you can see there that the two largest amounts are your maintenance and repairs, of course, solid waste, which is a wash, and then your administration expenses as well. So another way to show your expenses. This is another way you can depict it or show it in what's called a bar chart. So again, you got your 5 years beginning with the top, and then you go down from the top to the bottom from 2014 to 2018. Here you're looking to say, okay, how are my expenses changing overall from year to year? And then find out what the reason for that. At the bottom, you can compare also to the other districts or other utilities in your area, whether it be WCs, IOUs. You want to make sure that you're comparing with like other utilities though. And then here's the water accountability ratio. Now TCQ requires us to do an accountability report every month, which shows the difference between the water we pump in or purchase and the water we build or sold to customers. So again, we start with 2014 on the left to see how we are doing. You can see there we started with 88, then went to 88, then we started going down. 81, we had some line losses, 81, and then we corrected those and went back up to 85. So again, you're starting with the 280 million gallons pumped. We build 238 gallons, and the difference is that ratio. Now what I have people do is convert that 238,000 divided by 1,000 and multiply it times the lowest cost per thousand. So you convert that to an actual dollar amount for the board. So it makes more sense in terms of what are those gallons in dollars lost. Because if the gallons weren't lost, they would have been sold. So it's actually revenue loss. And that's on a separate report, an Excel spreadsheet that's done automatically once they enter the data. And again, at the bottom, we just compare ourselves to the surrounding or like other districts to see how we are doing compared to them. And with that, I am happy to take your questions and get any feedback or comments you may have for me. Thank you so much for your time and attention.